Okay, well, hello everyone. Welcome to the show. Thank you. Sorry about a few minutes delay. We were just getting ready and getting set up. Since the show is live, give me a thumbs up if you can hear me with no problem. Let me know. We got, of course, Brian in the office today. How you doing?
I'm good. How's everyone doing out there today? Hope you had a good day. Had a good opening. Few opportunities there, and some of the Chinese stocks really took off this morning.
Yeah.
Not sure why. If there was some good news, they seem to be locked down, lockdown off, lockdown. So it's and I think these stocks will trade up and down depending on which side of that coin you're on. So maybe we had some lockdowns off today. So anyway, that was one sort of bright spot in the market. I know some of our traders took advantage of BABA, which really took off.
Yeah.
NEO, I think, took off. So a lot of good moves in the Chinese stocks.
So I got the chart of BABA up, perfect kind of 5-minute opening range breakout. These are kind of your Andrew special per se. Broke out of this range and then continued going higher. Pretty strong move. So people are commenting background music needs to be turned off. So if our producer no, can you make sure the background music is off? What a day, tons to talk about. Of course, today we have our guest. It's a Thursday. We usually have guests on Thursday. Kreda is joining us, and she's going to talk about mental toughness and your relationship with money. She's created a presentation. It's going to be an awesome conversation. So definitely tune in. It would be exciting. But of course, like every Thursday, there's tons of stuff to talk about the market. So market was strong in the morning. We kind of gapped up. Let me bring up the trading terminal chart, go to the overview page. We gapped up, we were strong, and then on all the indices we sold off, Brian. So sold off on SPY. SPY is now red. NASDAQ, same thing, red. Dow is still green, IWM still green, but similar pattern. And Bitcoin broke out of that 23,000 range, so it's now at 24,000. How are you reading this? Is the move done? Exhausted? We're gonna start a bear market now? Back to bear market, or?
Well, I think I'd be foolish to say that this is the turn, but certainly, we had a big day yesterday. I was actually a little bit surprised at the response we had at the open today. A pretty strong follow through.
Yeah.
And I think we've just gotten into an area where there's just exhaustion of buyers. That's not to say they're going to go take a nap and then come back tomorrow or on Monday, but certainly we've had a couple really good days. There was that 4,200 level on the SPY. That was sort of a key number, and we pushed through that. And now I just think that the buyers are taking a bit of a break here, but I think the trend is generally flipped to the upside, and now it's up to the bears to prove that this market can't go any higher.
Yeah. No, exactly. I totally agree with you. I just went to Dr. Berry's Twitter. I couldn't find it, but he tweeted yesterday, because he deletes his tweet. He tweeted yesterday, NASDAQ is now up 20% from the lows. That means a bull market. Who comes up with these definitions? They're in the 2000 dot-com bust. NASDAQ did that 7 times. He put up the chart on that. Did you see that tweet? Did you have a chance to see it?
No, I didn't get a chance to see it, but
let me see if I can find it, because I know one of these social media ones shared it, but which I think was interesting. But
but it was funny. I mean, we were commenting on this morning, how it seems like the retail trader is back in full force. We've seen over the last week, all starting last week, we had all the meme trades, the old meme trades start to pop up again. GME, Bed Bath & Beyond, BBBY, AMC. They were all going after the heavily shorted stocks again. The same playbook from 2020. So
the degens are back.
Yeah, exactly. Yeah,
that's amazing. So kind of our agenda today. A couple of interesting things happened. I want to talk about them in the world of Twitter. And of course, we want to look at the numbers and take a look at some of the sectors relative to one another and see if we can find some kind of a pattern and trading. Before I do that, Brian, how was your trading day today? What did you trade? What positions you have open going into the weekend?
Yeah, no, today I traded for the day trades. I was Six Flags.
Mm-hmm.
I really liked. I know a lot of this is just my particular style or my particular preference. I do look for stocks that are gapping down.
Yeah.
And I look for this rising devil setup that I've talked about and done presentations on, and Six, the theme park company, it pretty much checked all the boxes again. So it had earnings. So I was looking, they're always looking for an event for the rising devil trade. So the earnings was the event. It was gapping down because the earnings came in disappointing. The stock was trading below the VWAP, which is another box. And then the final box that it checked, it was starting to look weak as we went into those last 3 to 4 minutes just prior to the open. And when all those boxes check, it's to me that sells. It's going to continue to sell off when we open, and that's exactly what it did. So again, that was one trade that worked out quite well.
Yeah, got a very high short float as well. I'm looking at our trading terminal at the fundamental page right now, and the short float is about 10%. So
not extreme. I mean,
not extreme. No,
yeah,
definitely not extreme. Yeah.
No, I mean, and that would be a concern for me on a taking a short on a stock that has a very high short interest, because it's at the very least it's gonna trade a little bit more erratically.
Yeah.
So when I see something like 25, 30%, then that starts to get to be a significant amount of the float. But 10 is getting up there, but still not overly shorted, heavily shorted. So
yeah. You also did another trade which we did together in the chat room in the morning. If you're not part of our chat room, it's a lot of fun. Definitely consider. So Disney had earnings. Their earnings were phenomenal. I mean, actually, to be honest with you, I haven't really looked at the numbers, but at least on the headline, it seems like subscriber growth was estimated to be 9 million, but they grew at 14 million. They've now passed with all their affiliate, like ESPN and all the affiliates channels that they have, they've passed Netflix at 223 million. So overall, at least on a headline level, it was pretty good. The stock gapped up, and we see this on a daily when kind of the stock on a daily kind of tops out, and it provides a really good opportunity to sell premium. So I took advantage. I think you took advantage as well. I saw some 124 calls. I think you did 125.
And I did the 125s. Yeah. I sold them, and Disney did come out with some really good numbers. I mean, the subscription numbers were the ones that people really focused on.
Yeah.
There were some downsides to what Disney reported. I mean, the streaming business is losing a lot of money for them right now. Yeah. It's burning cash like crazy, and people are questioning when is it ever going to generate some income for the company.
Yeah.
Because right now, the theme parks, the theme parks that Disney operates, obviously, they were big winners in terms of the bottom line. So, but the streaming business, even though they got a lot of subscribers, it's still burning more cash than it's bringing in. So
it's a tough business, yeah.
It is a tough business. I mean, it's an expensive business to create content.
One of the guys that I follow, if you watch CNBC, you probably have seen him too. Do you know Damodaran? He's the head of NYU finance department. He calls the content business the hamster wheel business. So it's like a hamster on a wheel. You got to constantly create more content to get more subscribers. When you get more subscribers, you got to create new content over and over. It's like the hamster. Yeah. So it's not a very sound business model. That's why a lot of these guys are introducing ad supported as well as your own, like your own kind of getting the content from other people, right? So.
Yeah, and that's what they're saying is maybe one of the paths out of this is more ad revenue. They're upping their subscription price, so and it's not a lot. I think they're going from $8 to $10 or something.
Yeah.
So it's not a lot, and even people that are maybe have some tight budgets, I mean, another $2 a month hopefully doesn't make that much of a difference. So, yeah, hopefully Disney can find their way out of and start generating some cash from this business. But yeah, you're right. It's tough business, and it's not what you did today. It's what what are you going to do for me now?
Exactly.
Type business, right?
That's exactly how the market is. So. Yeah, I got my trade log in front of me. Yeah, I sold the 124 Disney calls for 48 cents, and then I covered them later today they lose their value so quickly. So I covered them in about like 30 minutes later at about 25. So they lost half their value as soon as Disney dropped. Overall a decent day.
Yeah, and I did the, you actually were the one that put the one, because we were talking about this yesterday. I was actually going to sell puts.
Yeah.
Because I felt really confident that Disney was not going to drop a lot, and I didn't expect the magnitude of the reaction we got, but I kind of felt confident that it wasn't going to drop.
Yeah.
So, but I didn't end up selling the puts, so that would have been just premium would have collected. But you actually put that in my mind that hey, there could be a call sale here above where it's topped out. Yeah. So I took the 125s.
Yeah.
And I got about 55 cents for them, and I'm still holding them. I just looked at them; I think they're about 7 or 8 cents right now. So
you're good. Yeah. That's awesome. You know what? The worst thing that could happen if you sold those puts on Disney is you end up owning some Disney shares. I mean, the stock's already down so much. What's the worst that could happen, right? So it's even if you would have sold it, it still would have been a really good option.
Well, then that was my thought too with selling the puts. I mean, would I want to own Disney at $100? Maybe, probably. I mean, it was putting in a pretty significant bottoming pattern around between 195 and 95 level. So, I think the premium wasn't that great. Probably what kind of was the deciding factor as to whether it was going to. Do it or not.
Risk it or not, exactly.
But yeah, you're right. The premium really came out of them, and of course, I was using the expiration date of Friday, tomorrow. So the time value is really leaking away on these things right now. So.
Exactly.
Yeah.
So I'm monitoring the chat. Our chat is extremely quiet today. Like it seems a little odd. So shoot us questions if you got questions for us. In about 15 minutes, we're gonna add credit to the show. And we're going to talk about mental toughness. Credit has created an amazing presentation for us, which I can't wait for her to go through. Tons of gems and valuable stuff in there. So I looked at a couple of data before the show started. Oh, there we go. Carlos is now saying hello. Carlos, good to have you here. So since the job number came out this Friday, and we know that showed that economy is really strong, a couple of things really stood out to me, Brian. One of them is, okay, so when you're looking at XLY, which is consumer discretionary versus the SPY, it seems like this downtrend finally broke out in terms of relative strength, and discretionary is back. What are your thoughts? Do you think XLY is in a situation where you could start building position? Is it beaten down enough, or not yet?
Well, again, discretionary is, all these. To me, I just look at this in terms of risk on and risk off trades. Certainly, the discretionary side of things is risk on. So if you think, inflation's been tamped down and you think we're not going into recession, I mean, that's where people go back out and feel good and they shop and they buy things that they don't need.
I actually want to ask you that. Do you think inflation has topped out? Because the natural gas numbers today and how natural gas reacted, that was, and look at XLE today, right? Very strong.
Yeah.
That's kind of, and someone's asking in the chat why NASDAQ is dropping. That's kind of like reining in the inflation has peaked rate.
Yeah, and I've been in, as you know, I've been in the energy trade. It's been really good. I've been in and out of it. I got out of it this morning just before because I didn't want to hold my natural gas position through the inventory report, which happens on every Thursday at 10:30. So I got out of it, and then it bottomed. It seemed like maybe there was a build or something. I didn't really even look at the number. I just looked at it bottom, and then I just watched it start to come back. So ended up getting back into it. But this is a sort of a good point, because this is one of the points that sort of we've been making is energy energy can really drive inflation up or drive it down if energy is dropping. But we're seeing a sort of a resurgence in energy prices, and that's not going to be good for inflation. So because everything we do, every good that we consume usually requires energy to produce, and it also requires energy to move it to the store or whatever. So energy is an underlying driver of inflation, the way I view it. So it looks to me like energy is kind of making a recovery here.
I agree with you 100%. I mean, energy up today 3.5%. That doesn't seem like supply chain issues have been fixed and we have kind of topped out there. Mariba is talking about technical on the cues and says it's a major level. So I'm about to bring the chart. I have actually another chart that is really interesting as well. Sorry, Brian, you were saying?
No, I was just saying, I guess I'm not really 100% clear as to why energy is sort of making this big rebound here, but it's definitely sort of breaking out of this big drop that we saw.
Yeah,
and I'm looking at the XLY here as well. I mean, we are sort of flirting with what looks like trying to break a downtrend line. So
yeah, so this is very interesting. This is a major resistance level for the energy and the NASDAQ. So this is a comparison of XLK versus the SPY. So this is relative performance of XLK, which is a proxy for technology. That's the technology sector. Kind of think of it as NASDAQ 100 and versus the SPY. And you can kind of see this was tested one time in 2020, one time in 2021, and now we're exactly at that point. So very similar point to what Mariba is making in terms of resistance. 3 times we've tested this level. So if we can break out of this, this could, again, for our technical traders and folks that look at it from that lens, that could be a catalyst. But so far it seems like we're rejecting and we're moving back. So yet to be seen.
Yeah, I am looking at this XLY chart, and we are, if you connect sort of this that's downward trend line that we've been following, we are right back at that trend line after putting in sort of a bottoming pattern here. So similar to what all the indexes look like actually, where we kind of did a bit of a head and shoulders bottom back in middle of I guess it was middle of July, and we've been coming back up to that trend line now. So
yeah, and then another thing that has happened, and this was really interesting to me as well, is the dollar. So dollar was down today again. There is a narrative going around Twitter and the FinTwit and people who I follow that tell me dollar has topped, and if we think, hey, the Fed's gonna start cutting, right, and they're turning dovish, then that kind of feeds that narrative as well, because we know your currency, basically the currency gets impacted by 2 main factors. One of them is interest rate parity, which is what is the interest rate of the country and how aggressive the Federal Reserve is, and one is inflation expectation. So these 2 factors really impact currency pairs. So if we think the Fed's turning dovish, then that means the dollar has topped. And this chart kind of shows, this is the USD, dollar, of course, was very strong, was one of the best performing assets going into 2020. It seems like we're getting some topping action here. Brian, what are your thoughts here? You are our macro expert.
Yeah, well, if I look at the UUP, which is the dollar index I kind of watch in terms of, just a basket of currencies, primarily weighted to the euro and the...
Can you trade that, by the way?
Yes, you can. Yeah, UUP is I think it's an ETF or it could be an ETN. I'm not sure which, but it is tradable. It doesn't, it's not a big mover. Right now it's when we peaked out, it was just over 29. That was back sort of early to mid-July. It's now down around 28.11. So it's from a range perspective, it's not moving very much, but. It does give you an
indication. It's still pretty good, 25 to 28. What is that like?
Yeah, well, that was a big move it made. But we have pulled, we spiked, we have pulled back significantly. We're kind of back into a what looks like prior resistance,
Yeah.
which was, there were 3 points. It was a bit of a cup and handle there if you
Yeah.
look at that breakout that we had back in.
Yeah, so I got it in my chart as well.
Yeah, you can see that
absolutely
nice
right,
little
yeah.
cup and handle, and then really a strong breakout from that cup and handle, or you want to call it an ABCD pattern. But anyway, we really got extended once we got into middle of July, and now we've had this pullback, and we're trading right back at this breakout level. So, to me, I think this is kind of where we figure out where it goes from here. Is it going to start to creep back up again, or are we going to start to roll over a bit? I don't know. The Fed keeps saying that they're not, they're probably not done. They're going to need to see more evidence that inflation is beaten down before they make any big moves. I mean, we dropped pretty significantly in the percentage yesterday of possible rate hike from 0.75 to 0.5.
Yeah, exactly.
I don't know.
Big.
A lot of people are saying that's, investors and traders are looking at this with rose-colored glasses, and that's it's really not as rosy as everybody is looking at it as. So.
Yeah, I mean the 10-year did, it's so interesting how they move in the yield market today. So yesterday when we were running the show, the 10-year was at 2.7, now we're at 2.88. So it seems like the 10-year is moving up a little bit, especially with the energy number, the natural gas and how energy is performing today.
Again, the market's kind of responding to this energy push here and thinking, okay, if we're going to get another surge in energy prices, inflation is not off the table. It still could rear its head, continue to rear its head.
Yeah, this takes me back to this favorite quote that I have. It's if you go, I put it out in my in the newsletter I put out. I just want to show it because I think it's so important. Let me bring this up really quickly. And it's so true. It's so true. You feel like you figured out the market, and the market's constantly. I talk about the Fed pivot and what it means and the rates. And in the tweet of the week, I said, this is my favorite tweet. It says by Michael Gadd. It says, bear markets make fools of bulls and bears. So it's so interesting. Earlier in the year, I think it was around March, I was having dinner with one of my friends who is a portfolio manager for BMO Nesbitt. So he's working with wealth management, and he was just like telling me, oh, we've been long energy since blah blah. He was like so arrogant and so proud of the fact that they've been overweight energy. Literally a few weeks after, energy dropped by 20% within a span of like.
Oh yeah, no, we looked at that chart yesterday. We were talking about how the bulls take the stair up and the bears take the elevator or the window.
So that was really interesting to me, like how confident he looked, and then it makes a fool out of you. That's what a bear market is, exactly. Yeah. So it's almost closing time. You have about 3 minutes. 3 minutes to go. If our producer can send a link to Credit, so hopefully she can join us within the next few minutes. Again, she has prepared an amazing presentation on topic of mental toughness and your relationship with money, and I think that's really important, and we can't wait. I'm getting the thumbs up signal. I believe Credit is on the line. Credit, how are you? Welcome to the show.
Hi Artie, hi Brian. Thanks so much for having me here today.
Hey, good to see you.
Absolutely. Yeah, it's great to have you. The pleasure is all ours. We know you're based in Europe, and it's a little later here, so we definitely appreciate you giving us the time for our community.
Not at all. Sure, I work in Easter time because most of my clients are in America anyway, so I'm well used to it. So it's all good.
Okay, that's amazing. Well, Credit, Brian and I were just recapping the market, what's been happening, and of course we started green and went red, and the market is volatile. Nasdaq was up 2%, now it's down 60 basis points, and that's your relationship with money and psychology is now more important than ever. And I know you were kind enough to prepare us a presentation. So I'll start as whenever you're ready, and we can start with your slide, and I'll have them up on my screen.
Awesome, thanks. I think my screen might be frozen, the screen in front of me, so I'm not sure if I'm going to see the slides as you move through them. So I don't
I'll,
know. I presume that's an issue on my computer,
not a problem.
not
I'll
across
make
the
sure. I'll make sure. I'll make sure I'm moving to the next slide as you're speaking.
Perfect. Okay, so let's just start with the trading as a performance sports slide, and we'll just do it there. I have another computer beside me, so I can follow it here. So hopefully my computer will kick back in. I don't know what's happening with it, but anyway. So to anyone who doesn't know me, hasn't met me in the Bear Traders community, I actually started out as a sport and high performance psychologist, and so I bring a different lens to trading psychology. I did at some point make the connection between the mindset that's required for trading and the mindset that's required for professional sport and athletes to achieve at their peak. And so then I moved into working with traders. So I bring, I guess, a different lens to trading psychology, or there are two lenses that you can look at trading psychology through. And one is looking at what you're doing with the technical aspects of your trading and kind of trying to manage your emotions by tweaking the technical aspects of your trading. So, for example, if you find that you keep breaking your rules, you might reduce your position size or kind of control your risk reward, or you might even trade on higher time frames. So you're making some changes to how you're actually trading in order to manage those emotions. So that's one part of it, but it's definitely not the whole picture. So what I want to cover today is the kind of human performance aspect of trading, and specifically we'll talk about money mindset, because I think that's probably very relevant as the market is in this strange sort of transition phase, and people's money mindset might be very much playing into their trading and actually impacting how you trade. So hopefully it's a relevant and timely topic for everybody. But basically why I'm saying that trading is a performance sport is because there is a huge similarity between what's required, the mindset that's required for peak performance across all these different high performance domains where split second decisions can make or break your career. So sport is one of those and trading is another, but there's other, if you're an air traffic controller, those kind of things, they all fall into this same very high pressure performance environment or performance context. And actually, when you compare what athletes have to do and what traders have to do, I would nearly say that trading is almost more difficult because, yes, in both domains, you have to be able to perform under pressure. You have to, stay resilient. You have to be able to be confident and decisive and make quick decisions under pressure. But in sport, there's actually kind of guidelines, or there's a capped time frame around when you need to do that. So if you're playing a match, depending on the sport, it could be 80, 90 minutes. And after that, then you don't have to perform at that high level of focus anymore and you can switch off. And in trading, those boundaries are not there. You're trading for a lot longer of a time frame. You technically could be trading, all hours. So you actually have to have really excellent self-management. You need to be able to manage your own psychology as a person in order to perform at your peak in trading. So that's why I'm saying that trading is a performance sport. But what comes with that is that you're actually able to use these tools and techniques that athletes use to work on their mindset to achieve Olympic medals and to win championships. And you can apply those exact same tools and techniques to your trading to get the best out of yourself and to get better results. So that's the lens that we're looking at trading through today. And like I said, we'll go specifically into your money mindset, but I just wanted to set that context. So if we just move to the next slide about the mental edge there, please, Ardy.
Yeah, I got it there for you. Yeah.
Great, thanks. So the mental edge, I'll just read this out, but I'm going to summarize it. So it is the competitive advantage that you experience when your mindset, emotions, and conscious actions all support the consistent and successful execution of your trading plan. Which sounds vague, is that in order to perform at your peak in trading, so to be making the right decisions, to be taking entries, when they appear, to be only taking your A+ setups, all of that stuff, you need to have your own beliefs, emotions, and actions all aligned, and you need them to support what you're trying to do in your trading. So basically you need everything to be in sync. And I'm going to talk about what happens when that's not the case later in this presentation. So when we're talking about mindset and why the mental edge is the difference between, in sport, I guess, winning gold or winning silver or maybe not medaling at all. Or in trading, it makes the difference between having an excellent trading plan and actually executing it, especially when there's a lot of uncertainty in the market or conditions have changed. Or the difference between having an excellent plan that you've put a lot of effort into, you've back tested, and then you go into the market and the pressure's on, you panic and you do the exact opposite of what you wanted to do. At this level of performance, it's your mindset that actually makes those marginal differences. So those split second tiny decisions are all influenced by how well you can control your mindset under pressure. So it's something that you actually need to actively work on if you really want to be getting the trading results that technically you know that you're capable of. So working on the mental edge, as if anyone's been following the webinars in BBT, there's a ton of different ways you can approach this. But what I really wanted to speak about today is how your money mindset impacts how you trade, because this is an aspect that of trading that a lot of people don't give attention to, mostly because they're not aware that it's something that can be influencing them, because it all comes from your subconscious mind. And I'll explain how that happens as well in a second. So we're talking about your relationship with money and how that influences the actual actions that you're taking when you're trading. So I'm going to make that a little bit more specific and concrete with the next slide. So we'll just jump into trading challenges around money.
Yeah, go ahead.
Okay, thanks. So what we're talking about here is, I just have a list here of all of the different ways that when you're thinking about money too much, or your relationship with money can be influencing actually how you trade. And if you think about it, most trading psychology challenges boil down to over-focusing on the P&L. And I have to explain that, because sometimes when I say that, it might seem like I'm saying that the money, the outcome isn't important in trading. And that's absolutely not what I'm saying. Of course, if you're trading to make money, and we all accept that. And that is the bottom line. But there is a time and place to actually be focused on the profit and the outcome, to be kind of reflecting on how much you've made, all of that. And it's not when you're right in the middle of a trade. So yes, of course, part of your strategy is going to be that you have your profit targets, all of that, of course, you have your stops. But if you're focused so much on the money that you're making and you're emotionally attaching to that, so what I would call focusing on the P&L, while you trade, then it's going to actually change how you're trading. So to make that a little bit more clear, let's go through these examples. So if you have a fear of losing money, for example, so you kind of have a scarcity mindset, you're afraid of losing money, then you're going to be more risk averse potentially. So maybe you don't even get into the trade in the first place, or else you're getting out of trades too quickly. So, you're in a winning trade and you just get anxious about it. So you actually jump out of it. So your relationship with money and your beliefs around money are actually impacting how you execute your trading plan. So other examples, if you're feeling greed and FOMO, so, emotionally charged, then that can also lead you to the opposite, staying in trades too long. So, you're trying to squeeze every last drop of value out of the trade because you feel like you just want to keep making more, and then you're actually changing how you should be trading. More examples. So revenge trading to make up for lost money. So based on what happened with the last trade or the last number of trades, suddenly you find yourself, maybe you've taken a few losses and you're trying to trade yourself out of the red. You're getting angry at the market because it's not doing what you wanted it to or what you expected it to, and then you start actually revenge trading. So these are all examples of how your attachment to money is influencing how you trade. Also taking every opportunity to make money. So where, you're taking low quality setups, you're just taking everything that moves, and maybe you have your trading plan, you know what stocks you want to be trading, and then you hear in the chat room that somebody's doing something else, and suddenly you start doubting yourself and you think, oh, well, I better jump on that opportunity. So in that example, you're actually you're being driven by the money again, because it's pulling you away from the plan that you've set for yourself. Having heightened pressure after a loss, feeling like successful trading is a reflection of you as a person. So actually attaching your self-worth to the money that you're making. This is a huge challenge for traders, and it's something that comes up a lot. Maybe even focusing on what other people are making, which can create unrealistic expectations for you. So let's say that you start trading and you think, in a year I'm going to be making my full salary from trading, I'll be consistently profitable, and it looks easy because everyone on Twitter is posting all their great trades. So if you have that focus, and again you're thinking about that while you're in the middle of a trade, it's going to change how you actually execute your strategy or your plan. So those unrealistic expectations of how quickly you should be growing your account. So they're all kind of concrete ways that if you see these things happening for you in your trading, it's worth looking at that deeper level of, you know, what's going on in terms of my own psychology. So if those things are happening, yes, of course, you can try and manage them with techniques such as reducing your position size and all of those kind of risk management, I guess, safety nets. But it's not the full picture because there's something deeper going on. And so if you find that you're actually consistently kind of making any of these mistakes in your trading, or you find that you're really struggling with indiscipline, then I would say consider, you know, what's happening with your money mindset and really see if that's something that you feel is actually influencing your trading. And I'll talk about, you know, how you can practically do that now. So if we just move on to the next slide, please, Artie.
Yeah.
Okay, so what I wanted to kind of explain here is that all of these different ways that you can experience indiscipline or you can be breaking your trading rules, they're all preceded by a belief. So it's not like you just go into the market and this suddenly starts happening, because mostly people go in with a very clear plan, and the problem is that they know what to do, but they just can't do it. So it's something that's happening kind of at the level of the subconscious. And really what's happening is, in these instances where I'm talking about challenges that specifically relate to your attachment to money as you're trading, you are actually being driven by your beliefs around money, and these are at a subconscious level. So usually these are things that you're not even consciously aware of, but they're driving your behavior. And so if you want to, you know, become more disciplined as a trader, to really reach that higher level of consistency, you have to be able to look at your beliefs. And specifically in this talk today, we're looking through the lens of your money mindset, but obviously you can look at, you know, other beliefs that relate to other areas too. So I like to kind of explain this. I'll move to the next slide because it's probably more relevant to explain this analogy with the next slide, please. Thanks, Artie. So I like to explain this as if you were driving a car. So let's say your conscious mind. So this is the part of your mind that's accessible to you at any time. So, you know, the part of you that sets goals, can do maths equations, can remember what you had for breakfast. All that information is very accessible to your conscious mind. So then we also have our subconscious mind, which is all of the stuff that is below that surface. So we can't easily pull information from our subconscious mind to kind of think about it. So let's say if I said, you know, how did you feel on your last day of primary school, you know, when you were 12 or something like that. You might not easily be able to remember that, but that feeling will be buried in your subconscious. So your subconscious mind has this whole ton of information and experiences and, you know, all your learnings from whatever your parents taught you, all of that, that's all stored in your subconscious mind. And the kind of irony of this is that we think we're in the driver's seat. So let's say we're in a Lamborghini and the conscious mind is like the driver in the driver's seat of the Lamborghini. You've got your goals. So let's say your trading goals, you know what salary you want to make this year, you know what you want to make this week, and you're driving the car and you think that you're in control. But actually, our subconscious mind drives 95% of our actions. So all of this stuff that's outside the level of our conscious awareness is actually driving our actions in the market. And the problem with this is if you're not aware of that, or if you're not kind of looking at what's going on there, so looking under the hood of what's in your subconscious mind, then it can really be contributing to indiscipline in your trading and breaking your trading rules. And this is why this piece of trading psychology is so important. And this is the same for athletes. This plays out for athletes in the exact same way. So when we're talking about, you know, athletes needing to work on their mental edge, they also do it at the more surface level, the more practical level, and the deeper level too. So if our subconscious mind is driving 95% of our decisions, our emotions, our actions and behaviors, what in this analogy of a Lamborghini, it's like the fuel in the gas tank. So if you have an excellent driver, so let's say you're the best driver in the world, maybe you're a Formula One driver driving that car. If the wrong fuel is in the tank, so let's say you've put, I don't know, petrol instead of diesel in the tank, then you're not going to be able to get anywhere. It doesn't matter how skilled you are as a driver. If the wrong fuel is in the fuel tank, the car is not going to go anywhere. And it's the same with your subconscious beliefs. So if you program your mind with beliefs that actually sabotage your trading, or they're not helpful to your trading goals, then that's what's going to play out in your trading. You're going to, you know, find that you're breaking your trading rules. You're going to be emotionally charged, so you'll be experiencing FOMO, anxiety, nerves. You might even be physically feeling kind of anxious and tight and all of that, stressed out while you trade. And so what we want to do is, if you really want to hit your trading goals, you need to look at the beliefs that you're programming your mind with and whether they actually support your trading goals. So this can happen in the realm of money. Money is such an emotive topic. It's, money is power. Money is choices and freedom. We all have interpretations of what money means to us. And I'll explain this in more detail, but basically that's our money mindset. It's all the sum of our beliefs and our experiences about money. And this all happens at the level of our subconscious mind. So we'll get into exactly how that might play out in your trading. But so what I'm proposing here is that if you find that, especially in this market with more uncertainty, you're under more pressure and maybe you're kind of making decisions that are not that effective, or you find that you're jumping out of trades too quickly, or whatever it is, that consider looking at your money mindset and see if this is something that's influencing your trading. So we'll just move to the next slide, please, Artie.
Yeah, sure.
Thanks. So what do we mean by your money mindset? So specifically, it's the sum of your beliefs, feelings, very important when we're talking about the subconscious mind, judgments and expectations around money based on your conditioning and previous experiences. So your money mindset determines that the actions that you take in relation to money, and ultimately then, of course, to a large degree, it actually determines your level of wealth. And this is true outside of trading. So even say for someone who's in a type of, 9-to-5 job, and they're going for promotions and stuff like that, their beliefs around money can really influence the amount of salary that they're making. So it's not just specific to trading, but obviously when we're in the trading arena and it's a much more heightened pressure kind of environment and there's nowhere to hide, then your money mindset is really going to come to the fore. And it's important to understand that this is the sum of all of these different things. So your money mindset is created from a whole host of different things. It could be your cultural upbringing, what your parents believed around money. So how did they speak about money when you were a child? So for example, if maybe your parents believed that people with money were kind of greedy and they liked to live a more simple life and they thought that that was the right thing to do, which is quite common. That comes up a lot in my coaching. Then you may, as an adult now, have a desire to make more money. You really want that freedom, that autonomy that trading can give you, all of that. But if you have this belief in your subconscious mind, or this programming from how you grew up that contradicts your current goals, then that kind of tension is going to play out in your trading as you potentially self-sabotaging. So I'll explain that better with another slide in a second. But it's just to say that your money mindset is not just kind of one belief around money. It's your whole relationship with money that is amassed through even previous experiences. So let's say that you are an entrepreneur and you've had a number of businesses and for whatever reason they've failed. Then maybe you're starting to build up a belief that, money comes in, but it goes out easy. I can't rely on always having money. If that was your specific situation, that could create a scarcity mindset, which if you bring that to the market, this feeling of, I never have enough, it's never safe, I need to kind of get all the money that I can because it can be taken away very easily. So this belief would be created by your previous life experiences. But if you bring that to the market, what's it going to look like? Something like, jumping out of a winning trade too soon because you're trying to protect your capital. It could look like even hesitating to get into a trade because you're afraid of losing money. Or it could look like even trying to, overtrade. So you're trying to take every opportunity that moves because you feel like this could run out, so my good luck could run out. So that's just an example of how a prior experience in your life with money can play out in your trading. So there's all these different kind of root causes that build our money mindset. And then it's up to us as adults to become very aware of actually what that is and how is it impacting our trading. So we'll just move to the next slide, please, Artie. So I'm going to make this more concrete. So let's really anchor this in trading. So here we have our conscious mind, the driver of the car, and the goal is I want to be rich. fair enough. That's pretty much, everyone's trading to make money, and then what they want to do with that is obviously varies wildly from person to person. But that is the bottom line. Like, that is the measure of performance ultimately in trading, is how much money you're making. So want to be rich, I'll follow my trading plan and I'll make lots of profit. It seems very, kind of straightforward and reasonable. So that's your conscious mind, though. So remember, that's only 5% of your actual programming that's driving your actions. That's only 5%. So let's say that through your experience, maybe your cultural background, what your parents believed around money, their morals, your previous experiences, life experiences. Let's say that you've built up these type of beliefs. So the subconscious beliefs, these examples that I have here. So one belief might be, I'm not deserving of money. So that's a very common one. Something that you might even, as I say that, you might be like, that's not me at all. But if you actually sit down and reflect about it, you might see that in your experiences in life, that actually makes sense, that belief could be driving your behavior. I'm always going to be poor. So if you've been trying for ages to make trading work and it hasn't happened, and for whatever reason your experience with money in the rest of your life was that it was scarce, you might have formed this expectation that I'm always going to be poor. No matter how much money I make, I need more. And this can happen. So there can be people who are millionaires who have a scarcity mindset, and I've seen this, and they're constantly worried about losing money. And it's because they're working from a belief. They're operating from a belief around money that tells them, there's never enough money. So until they change that belief, it doesn't matter how much is in their bank account, they're never going to feel safe and secure. Wanting more money is greedy and makes me a bad person. Again, something that you might have picked up from your parents or your upbringing. If I become rich, I'll be the subject of jealousy. So again, this comes up when I work with clients. These kind of self-sabotage, where you might be going well in your trading and then suddenly you do something really out of character and it completely destroys your trading for the day, or even you go on tilt for a week, and that can be an element of self-sabotage. And when we link that with a subconscious belief, that can be because you're actually worried about, if you make the money, it's a threat to you in some way. So let's say if you know that suddenly you were to make millions, that people around you would be jealous, and maybe your friends, you might have to change friends because it would cause some upset. Then there might be a part of you that's protecting yourself from that change. So these are all, we're talking about deep psychology stuff here, deep in your psyche, but it is really relevant. Even if you don't feel comfortable with the topic and you don't want to look at it, it's still impacting your trading. So it is kind of worthwhile becoming aware of this. Another example is more money means more responsibility. So often as you grow in wealth, or as you kind of become more successful in trading, it might bring more responsibility, and sometimes people are not ready for that, and that can be something that causes them to self-sabotage, to break their trading rules at a very unconscious level as well. So concrete examples of how all of these type of beliefs, which I've pulled from working with people, and these are very common, even though they might seem a bit alien to people. How does that play out in your trading? So we've talked about a few of these. Self-sabotage. So you're going well, like let's say that you've passed a trading challenge and you're funded, and you've got through the hard piece, and then one day into the being funded, you actually blow up your account. That would be an example of self-sabotage. Over-focusing on the P&L, as we spoke about before. Revenge trading, FOMO, being afraid to take a trade. Staying in trades too long, ignoring stops, ignoring daily loss limits. So especially if you're kind of in that mode of, I'll show the market who's boss and I'm going to make this money back at any cost, you can just blow past your daily loss limit. Poor trade management, poor entries, poor exits, etc. So hopefully you're seeing how these deep subconscious beliefs are actually playing out in your trading every day. And it's up to you to kind of understand, well, what is actually sitting there in my subconscious? What is my money mindset? And can I draw that link? So can I increase my self-awareness to understand how that belief is currently playing into what I'm, doing in my trading that I would like to change? So we'll just talk about then actually how you uncover your money mindset. So what can you do about this? If you're interested in this topic, if you feel like, yes, this resonates a little bit, but where do I go with it? Here are some simple questions that you can ask yourself to grow your self-awareness around what might be happening and to actually start shifting things in your trading. So you can use these questions to actually help you to overcome indiscipline and breaking your trading rules. So we'll move to the next slide, please, Artie.
Yeah, absolutely.
Okay, so I'm just going to go through these one by one to explain them. So first of all, ask yourself, what does money symbolize to me? So, what does having money, what does having money mean to me? What does not having money mean to me? And usually when I ask this question in a webinar, we'll come out with lots of different things like freedom, responsibility, choices. Basically, money is symbolic. It's obviously a form of currency, but it's a currency of power to a lot of people as well. So we project our own interpretations of what money means onto the arena of money, and then that impacts how we actually interact with it. So ask yourself, what does money symbolize for me? And really kind of give yourself time to sit down and reflect on this. So do it like a journaling exercise. And then ask yourself, and this one relates to the potential self-sabotage that I was speaking about, if I reached my financial goals tomorrow, what would change in my life? And who or what might I need to let go of? What would I need to be doing differently? So sometimes, obviously, there'll be lots of good things that would change, but sometimes you might be able to also pinpoint what might change that you're not comfortable with. So if your friends were jealous and you had to let go of friendships, that might be something that you would resist. So if you ask yourself that question, it's really relevant, specifically if you're somebody who is kind of self-sabotaging in your trading. Ask yourself, what did my parents or caregivers believe about money? So do I also hold the same beliefs? So you think about what happened when you were a child, but now reflect on, are you still carrying those beliefs? Are they helping you or hindering you in achieving your trading goals? Ask yourself, when I think of money, what emotions come up for me? So you might find that if you're somebody with a scarcity mindset, you feel like you're always in survival mode, you'll never have enough money. Then when you think of money, you might feel emotions like, fear, anxiety, tension. You might feel your stomach clench. You can actually feel physical sensations in your body. That will give you a clue as to what money mindset you're operating with. And then your language. So this is a really key indicator of how do you speak about money? Are you always saying, I never have enough, I wish I could make more? What are the actual words that you use to speak about money? So that will tell you, again, what your money mindset is. And it's really important to recognize that your money mindset is a choice. No matter what your previous experiences, whatever your parents or caregivers taught you about money and taught themselves. At this point as an adult, it's up to you. You have to take responsibility for it, and you can actually choose to reprogram those beliefs. So if you find that you go through this exercise and you find that actually your money mindset isn't serving you, it's not aligned with your trading goals, then you can change and reprogram those beliefs and choose what you're programming your mind with. So you can choose whether you're putting the diesel or the petrol in your Lamborghini and whether you're going to actually reach your trading goals. So it's really important to take that responsibility and accountability, because no matter what your money mindset is currently, you can always change it. And you can work on that through techniques like using affirmations, visualizations, and all these mental training techniques that athletes also use. And then just last two slides here. So another way of uncovering your money mindset is to actually then, sorry, Artie, just going to the next slide. I'm not sure if you have yet. It's very strange that my screen is so frozen. Thanks.
No
so ask yourself, sorry.
Go ahead. Yeah, good.
Thanks. So write down, after reflecting on all of those different questions, then kind of write down a synopsis of my current money mindset is. So, maybe you're saying my current money mindset is a scarcity mindset. I believe that I'll never have enough money. I've been trying for years, putting in effort, and I'm not seeing the financial rewards. I've been trading for 4 years and I'm not seeing results. I believe that, I'm not actually able to make the level of money that I want to make. That would be a synopsis of a money mindset. Then try and look at, how is this reflected in your life experiences and also in your trading? So this will really help you to draw that link between what those beliefs are and how it's playing out in your life. And once you understand that link, then it becomes possible to change it. But you have to have that awareness first as a foundation before you can actually do anything about it with mental training techniques or the kind of psychotherapy visualizations that we use to change things. So you have to understand what's happening. So really do, and particularly relevant to this talk, is ask yourself, how is this money mindset that you've uncovered reflected in your trading. So think of the P&L, and so how much money are you making, but also think of the actions that you're taking. If you have a good money mindset and everything's clear there, maybe you have excellent discipline and you're really able to execute your trading plan. And if you find that you're blowing up accounts, you're constantly over trading, revenge trading, then maybe it is that some of these beliefs about money are actually the root cause of that. So just lastly then, this is a very practical takeaway. So if people are not feeling comfortable with digging down that deep, one very helpful tip, which is surprising to me that not more traders do this, you may or may not fall into this category, but ask yourself how much money is enough money, because often we move through trading and even through life thinking, I just want to make more. The goal is to make more, make more. But what I find is if you can put a kind of a cap on what you're trying to make each day. And you can gradually increase that over time. So I'm not saying about making profit targets every day that, become your huge focus for the day, but rather having a very straightforward target that if you hit it, then you stop trading. Obviously, I'll caveat with this may not be relevant to everybody, but it's something that if you find you're struggling with money mindset and it's playing out in your trading, this can be a good thing to do for a short amount of time. So maybe like for a month or 2 months to help you build up better discipline, where you actually walk away after you make that, so you hit the target and then you walk away from trading. And that kind of builds up this idea that it's not a bottomless pit of needing more, which would drive behaviors like FOMO, just taking over trading, taking too many trades, taking low quality setups. If you want to eradicate that from your trading, then try and set very concrete and objective goals around both your P&L and your process. So hold yourself accountable to performance goals, to the execution of your trading plan, but actually sit down and think out like how much money is enough money for the next 6 months phase of my trading, and try and address any of those feelings of greed and scarcity that might be causing you to, even when you've had a really good trading day, feel like you should just stay in longer and just try and get that one more opportunity. So that's all I have. Hopefully that has given people a little bit of a taste of how you can start working on this area and the importance of it.
Yeah, wow, it was great. It actually resonated a lot with me.
Yeah, me too.
Yeah, definitely.
Yeah, it's something you commented on that I really picked up on and kind of resonated with me personally was my parents lived through the Depression. And during that time period, of course, everything was just so scarce, and they when you were living in the Depression, you didn't throw anything away. You kept everything. And when I was going through a lot of their stuff, I mean, they've passed away. When I was going through a lot of their stuff, I went through the attic, and there's just like all this stuff that they saved, and that was their mindset, that was set back during the Depression, is you didn't throw anything away. So there's like that trike that I own, that they bought for me when I was like 3 years old, was up in the attic missing a wheel. But that's maybe it was sentimental. They didn't want to throw it away, but they just didn't throw stuff away, and it carried on even as they matured and they had more than enough money to get by. So but that sort of attitude stuck with them all through their life.
Yeah, exactly. I think it exactly
it's such a good point.
Yeah, it exactly goes on the fact that you said 95% of it is subconscious, right? So you don't even realize it, and it's in there.
Yeah.
Yeah. Sorry, Creda, I interrupted you. Go ahead, please.
Not at all. No, I was just saying that that's such a good example, Brian, of how it comes down the generations. And, unless you actually consciously do something to shift it, then we just inherit how our parents think about money, and we just continue to perpetuate the pattern unless we actually, consciously do something to kind of shift it. So I think that's a really good point that, different economic conditions and all that can shape our parents' money mindset beliefs, and then we have to actually check ourselves and say, right, does this still apply? Does this apply with my goals? Does it apply with what I'm trying to do in my trading? And if not, then what can I do about it?
Yeah, no, absolutely.
Yeah. So we have about 5 or 6 minutes. So I want to give the opportunity to our audience. We have over 130 people watching the show live. So if you have any questions, it's the time now to type in. But before that, Corey, it's so interesting because a few weeks ago I was having a conversation with one of our traders, and we were talking about what is your why? Like, why do you want to trade? He asked me, and I said, I studied finance. I genuinely love this field. And I asked him, and he's like, I want to take care of my family. And whenever it becomes about family and your mom or your dad, it really becomes sentimental, and it becomes to that money mindset.
Yeah, the emotions too.
The emotions.
Right? Yeah.
Is there a money mindset, in your opinion, that you would see, like, if it's a survival and you're like, okay, you cannot be a successful trader with this money mindset, or you think everything can be trained and you can figure it out?
Absolutely, everything can be trained. Everything with mindset can be trained, but it starts with understanding first what's happening. So you can't skip that step. So that's why, and it's the most uncomfortable piece. Like, people, I believe this is why there are not more millionaires in the market. Like, a lot of this is an uncomfortable thing to do, to actually dig into your psychology, into your psyche, and ask yourself these hard questions. But if you're willing to do that first piece and actually, face yourself and put it all on the table and really be very honest with yourself about what you do believe, without judging why you believed it or where it came from. Blaming is not the purpose of that exercise. But if you can do that, then the actual shifting it and changing it to a new belief is very straightforward and easy. So really the hardest part is actually staring yourself in the mirror and asking yourself these hard questions and then understanding it. So even people with, the most kind of scarcity mindsets, even experiences repeatedly where they haven't met their financial potential or their trading potential, absolutely everything can be changed. But you have to be willing to face yourself to do it, to be honest with yourself, and actually to kind of put it all out there on the table and then seek practical tools that will help you to shift it. So, I talk about affirmations a lot, but for me, affirmations are the best technique to use to reprogram your mind. And they're easy to implement once you understand what's happening first. So that's the first part of it.
Right.
Yeah. Exactly.
Yeah, no, it's just, it reminds me of sort of, we struggle with addiction in this province, as well as, of course, across North America.
Yeah.
It's kind of like, it kind of reminds me of addiction. You've got to recognize you have a problem before you can fix it. So as you're saying, you've got to recognize, how you're emotionally reacting to your money, and before you can actually fix whatever problem you might have. I mean, I know I personally have a challenge. One of my biggest challenges in my day trading is, I tend to take profits too early, and that's something I continue to struggle with. Whereas my swing trading, I feel like I'm a little bit more disciplined. But the thing about my swing trading is I'm not staring at the screen all the time, and I'm not watching the little movements that are happening with the stock, and all of a sudden fearing that I'm going to, how a winning trade is going to turn into a break even or a loser. So. And it's
absolutely, it's that heightened pressure that kind of, and it is really important to say, like, this is so normal. Like, this is, every human being has these subconscious beliefs that are not optimal in some shape or form. So this is not like if you have a suboptimal money mindset that you're an outlier. It's not like that at all. And this is, again, why I believe that if people were actually willing to go and face themselves and do this work, so many people would have more breakthroughs in their trading, because we all have these, we all have to work on them. I'm a psychologist and I'm constantly working on my limiting beliefs in different areas. So it's really normal. But this is an advantage. If you know that this is the case, like if you're aware that your subconscious mind is playing out in your trading, and then if you kind of learn the tools to manage it, you actually are giving yourself a huge advantage that a lot of traders will not have.
Yeah,
agreed.
Definitely. We have a few questions coming in, but I know our time is a little limited. I want to spend a little bit more time on this as well. So if any other traders want to work with you, what's kind of the best way to reach out to you, and what are some of the programs you have in the pipeline right now?
Sure. So the best way, I guess, is go to the website. So it's creativeperformance.com. And there's a free masterclass there, which, would recommend as kind of entry point to understanding more about what I've been talking about today, wider than money mindset. So you can sign up for that. You'll get access straight away. So that's kind of on demand. And then I do have a course. So the Go Deep to Level Up Your Trading course, which is really comprehensive 8-week, everything you need in order to build your mental edge. So this builds you a skill set that will last, throughout your trading career. And we also cover a lot of, how you can actually get to the root of those subconscious beliefs and shift them in that course. So if anyone's interested in that, all the details are also on the website too.
Yeah, amazing. I just posted a link in our chat as well for anyone that is interested to check it out. Greta, it was an amazing conversation. Honestly, 40 minutes is not enough. We could go on and on. I had so many questions I wanted to ask, but our time is limited. I was monitoring the chat. I'm sorry you had a little bit of a problem with the screen, but the feedback, people were loving the conversation, and it resonated with a lot of the traders. So thank you so much for coming on. I know you have other commitments. We really appreciate your time, and it was pretty awesome. Thank you.
Appreciate it. Yeah, thanks for your time, Greta.
Thanks for having me. Really enjoyed it. Talk soon, guys.
Thank you, Greta. Have
care.
a good one. Cheers. Well, that was a great conversation, Brian.
Yeah.
What do you think?
Yeah, no, I thought it was really good. I mean, everything about trading is, as we know, it's 90%. You know what to do. If you've done all of our courses, it's just a matter of now applying it and controlling your emotions. That's basically what trading really boils down to. And of course, Greta's got.
We had a member in a chat today, and I don't know if it was he or she, but said, I'm struggling. I've been trying different chat room. I'm struggling. Any advice for me? And of course, I was trying to help him. Jared was trying to help him. The moderators that we're on. And it's it all comes down to this money mindset. When you have this survival of you got to make money, that's when it messes up things. But if you're just looking at it as, hey, I'm running a business, this is trading. Like I keep coming back to this, like this IWM short, right? I closed it. I lost a little bit of money. I managed my risks. This is part of the business, right? Yeah. You win some, you lose some.
And that's what we try to advocate or try to reinforce with people, that if you're starting out, don't just assume you're going to be a trader right away and you're going to earn your income right away, because that puts a whole lot of extra stress on you.
Oh yeah.
Thinking you've got to pay bills and therefore you have to be profitable every day. Start out part-time. Try to start out part-time if it's possible, and work into it, because putting a whole bunch, you don't need that extra emotional stress on you. That you've got to pay bills at the end of the month and you're depending on your trading to do it. It just heightens the emotional pressure that you feel to trade.
Yeah.
And you're not going to be successful. There's a high likelihood you're not going to be successful when you're under pressure.
Yeah. It's so interesting when you talked about like how your swing trades are better than your day trades. Yeah. That's one of the reasons I don't day trade as much, is like I love weekly options, because I come up with a thesis, I set up the option trade, I let it expire for the week. I know what it is. That's why I love options, and it's all because of that mental, right? Like you're watching the chart tick by tick, and it's very difficult.
Yeah.
Yeah.
So good.
It was a great conversation. Thanks for coming, giving me company, Brian. Really appreciate it. I know you're a very busy man, multiple business endeavors, a coffee shop. I appreciate it.
All right.
Thanks for coming.
Love to jump on. I'd love to hear from the various people that we have on as guests. Always some great insights with some of these specialists like Greta that work on the sort of the mental edge of trading. So it's good time, and always good to be on with you. And so we'll see everybody in the room tomorrow. We'll wrap things up here.
Exactly. We'll see if the market is any better, or we're going to continue to sell off. If you enjoyed the show, we're working really hard. Our producer, everyone's working really hard. Give us a thumbs up. Subscribe to the channel. That means a lot to us, to me as well. I'm spending a lot of time preparing material, chasing down guests, bringing them on. So that would be amazing. Thank you so much, everyone, and we'll see you tomorrow in the chat room, if not next week.
Yeah, definitely kudos to Art. He puts in a lot of time here, just preparing all the slides and stuff, and of course our editor-in-chief here, who's right behind me, Santiago. So thank you very much, everybody, and have a good rest of the evening, and we'll see you all in the morning, Friday. Thank God it's Friday.
Friday time, yes,
all
sir. All right, thank you. Have a good one.